Good morning, everybody, and welcome back to Beat the Bell presented by King Capital. Hope you guys all had an awesome weekend. We are coming off one of the strongest weeks in the S&P 500 all year. Incredible trend last week as ES futures rallied about 150 points virtually nonstop. Now, this week we'll be looking for continuation. Can bulls maintain the breakout over the previous July highs? We'll have to see. To talk about this week's trading and what we can expect in the markets, we've got Diamond Trades with us this morning. Good morning.
Alejandro, what's going on? I'm excited for another week of trading here. I think it's going to be a pretty solid week, pretty light week in terms of like news and stuff. We'll talk about that on Fed forecast in a little bit, but excited to get after it.
All right, and Stock Snipa, good morning to you, my friend.
Good morning. Last week was an absolute movie. It's awesome when your net worth increases by 10% when it's not even from your trading. I hope we could see some more of that this week. I hope we could see SPY go to like 470 or something crazy this week. But I need everybody to wake up in full energy today.
All right, let's get after it. Fed forecast. No, what do you got?
It's interesting that Snipes says that because he actually, we had a question a little while back where it was like 450 or 410 first. And I remember Snipes was one of the only ones to go 410. I just wanted to point that out. I'm sure we'll talk about that a little bit later. Let's dive into Fed forecast. We'll start with the economic calendar for this week. Pretty light, as I had mentioned before. Especially today, we really only got the Empire State Manufacturing Index. Tomorrow we do have retail sales before the open, as well as a Fed speaker in the NAHB Housing Market Index. More housing data on Wednesday with building permits and housing starts, continuing Thursday with the weekly jobless claims, some more manufacturing data, and then nothing really on Friday as far as high impact news. So really light week as far as economic data, particularly in the United States. We do have earnings this week, so that's really where the focus will be. So this week is going to be a pretty big week in terms of earnings. We did get some of the bank earnings on Friday to really kickstart this earnings season, but we'll get some of the large cap tech names reporting here this week after some of the banks continue to report early this week. Obviously, First Bank and Bank of America, Morgan Stanley. Some of those larger banks can report Tuesday, Wednesday morning with Goldman. Tesla is probably going to be the highlight of the week Wednesday after the close, as well as Netflix Wednesday after the close. You've got TSMC on Thursday before Amex and some others wrap it up on Friday. So a pretty solid week in terms of earnings. Earnings season, which again started last week, got off to a pretty hot start. Companies, even though we've only had about 6% of the S&P 500 companies report. So understand that this is not going to necessarily hold, but what we've seen so far is a 9% increase year over year in profits versus the second quarter profits from last year. So we do still have, again, the vast majority of companies still have to report. And so I doubt that number will hold, but it is good to see the banks reporting strong earnings, kind of to be expected, especially from some of those larger banks that we got on Friday. The one surprise was with Citibank. So Citibank had a rocky second quarter. Their profit actually dropped 36% versus the same quarter last year. Analysts had expected about 1.31 earnings per share, and they actually reported 1.33. So still a beat, but revenue did slip 1%. Institutional clients, which includes investment banking and trading, revenue fell about 9% there. Trading revenues fell about 13%. And then investment banking, which sort of includes, their fees, M&A sort of acquisitions and things like that, that revenue fell about 24% year over year. So really not a great quarter for Citi. They were trading down, I believe, 3.3% on Friday with the broader market sell-off in the afternoon there. The profitability metric Citi investors focus on most is return on tangible common equity, which fell to 6.4% from about 11.2% a year ago, and expenses were up at Citibank as well. So outside of Citibank, though, the vast majority of the companies that we got last week, JP Morgan and the others, reported pretty solid earnings. We'll have to see again going forward this week what we'll get from some of the larger players in the tech space after the bank earnings pretty much finish up by Wednesday morning. But that's what we're looking for this week. That's all we've got. And I will pass it back to Alejandro.
All right, let's go ahead and talk about the S&P. So quickly going to cover the system, and then later on, pending that we are able to take care of those technical difficulties, we see you guys in the comments. We'll be able to talk about trade of the week and what we were seeing in ES futures last week. So coming into this week, we're trading above the 50 SMA on both the 30-minute and 1 hour charts. So this was obviously a very clean buy signal with the cross of the 10 SMA over the 50 SMA. And reminder that when the 50 SMA on the 30-minute chart is in a steep uptrend, same story with the 1 hour 50 SMA, that is representative of momentum in the market to the upside. So we're obviously trending higher. That can be found by simply looking at breakout spots. We broke over the July highs, giant ascending triangle that had been building since June. Can talk about that later on. But we're also here looking at moving averages on the higher time frame, and this is another very, very easy way to be able to tell that we are in fact trending higher and that bulls are in full control. So for those traders using the system who got long on the buy signal, again, it's the cross of the 10 SMA over the 50 SMA. We got that on both charts. And when we get it on both charts, that's when the magic happens. And of course, we mentioned it earlier that last week, ES rallied 150 points off of the low. And so really, really nice move there. So coming into this week, bulls are going to want to hold above the 50 SMA on both charts. But really what's important is this hourly chart. After we get a giant rally, we can expect some corrective action, whether that means a pullback, whether that means an extended period of chop. That is all perfectly normal. And what is likely and what can likely happen is that we pull back to test previous breakout spots. In this case, that's about 44.95-ish ES, which is where the previous July highs were. And that is where we got the giant breakout last week and why we got all that momentum into the end of the week. So if we do get a pullback to those levels and we're still trading above the 50 SMAs, that would be an awesome spot to look for longs. All right, so that's going to do it for the system. I'm going to pass it over to Stock Snipa now for Bet the Bell.
What's up, guys? Got a really interesting Bet the Bell for you guys, hopefully, as always. I'm going to go ahead and start it off. You already know what the first question is going to be. I'm going to have to ask everybody, what do we think, green or red on the market today? I'm going to have to start with Alejandro.
I am going to go this is the toughest one so far, but I'm going to go green.
Okay.
Toughest one in a while, I'll say.
Diamond, what you got?
I will go red. I agree with Alejandro that after you get such an extended move like we got last week, you tend to see some chop, potentially a pullback. And so I feel like today's as good a day as any to go with red, even though we are obviously in this broader uptrend. Going red has not proved to be helpful for us here on Beat the Bell, but I'm going to go red today.
All right. So I got to disagree with you, man. I'm going to have to take green. But I can honestly see it going either way, considering the week that we had last week. So now I got a really interesting question. Diamond, I feel like you're going to absolutely love this one. Hondo, I feel like you're not. If you had absolutely had to work for an institution for a month, what institution would you want to work for? I'm going to have to start off with Diamond.
You mean like Wall Street institution?
Any financial institution.
I think I would pick BlackRock. I'd probably pick BlackRock. I think that, they have they literally just control like the entire market. And I feel like it would really be interesting to see how they develop their long-term theses and plans, I guess, to enter and exit markets. Like BlackRock entering or exiting a market can sort of make or break in. I mean, we've literally seen that with the whole Bitcoin ETF thing. Obviously, Bitcoin would have survived without BlackRock, but the fact that they have BlackRock throwing their weight behind it and their sort of institutional sponsorship, I think changes the way that people think about certain markets, right, when BlackRock gets involved. And so I think that I would probably have the most to learn from a place like that. So I'll go with BlackRock.
That's a great answer, man.
Thank you.
Hondo, what you got? What financial institution would you work for a month?
So my answer is going to be GTS. And the reason I'm going with GTS, when Diamond and I visited the floor of the New York Stock Exchange, we spoke with a market maker who works for GTS. And I just thought what he was doing was really interesting. And I quite honestly didn't understand it too well. And I think that in order to understand exactly what it is that they're doing, what better way than by, taking a month to work on the floor of the exchange from the perspective of a market maker. And I also have a friend of mine who works at GTS, also on the floor. And he seems to really enjoy what he's doing. So it's kind of like the other side of what we do, right? And I think that there's a lot of misconception when it comes to what exactly it is that market makers do. They're kind of seen as the devil, to the retail trader. And so I think it would be very, very cool to get the experience to work on a team like that on a pit on the floor of the exchange.
I like that. That's another good answer right there. One thing I want to clarify, the way that retail views market makers. I've sent the picture a couple times before, but it's a bunch of guys that wear cloaks. Their hoods are up so you can't see their faces at all. And
Pretty much.
And on that table, one of them is an alien, just to make sure you guys know. I'm going to have to go with Vanguard. I believe that Vanguard and BlackRock are combined worth 13.6 trillion, if I'm not mistaken. I could be off by a little bit. That was as of a couple of weeks ago. But yeah, very similar reasons to why Diamond picked BlackRock. I'm going to have to go with Vanguard. I feel like they also have pretty complicated strategies, and they definitely can make or break markets, just like he was saying. I'm going to go ahead and jump over towards my next question, which this one's going to be very interesting, and this is not going to be an easy question to answer. But all of your money, I'm talking every cent to your name, is in an account, right? You have to either pick Jim Cramer or Kathy Wood to manage all of your money. Which one are you going to go with? Hondo, I'll let you start this one off.
Okay. I'm going to go with Kathy. So if you guys remember, my hot take from early in the year was that ARK would outperform the S&P 500, which I believe is true year to date so far. But the reason I would go with Kathy versus Jim, Jim seems to be a guy who there's a lot of moving pieces there, and he's always, trying to either, maneuver around the volatility, trying to be the smartest guy in the room, buy this then, sell this now, and he's always wrong. We know that. But apart from that, I can respect at least the fact that Kathy's approach, while she does actively trade, is more so of I'm going to buy in companies that I believe, are going to experience growth over the next 5 to 10 years. And that's, something, if I were to be investing in somebody, that's what I would want to see. Somebody who at least has the stones to, remain in positions and understand that volatility is just part of the process. So I can respect Kathy in that sense. So it would be Kathy Wood for me.
I like that. Diamond, what you got?
Ryan, did you intentionally put Louis C.K. on the bottom of the screen instead of Jim Cramer? It's awesome. I love that. I will go with Cramer here. I'm gonna go with Cramer. I think Kathy gets a cheat. Kramer's been doing this for a really long time, and granted, he has some of the generational worst takes that we've seen. But I think at the same time, you don't stick around, particularly in this game, if you have absolutely no idea what you're doing. So I'm gonna buy low, sell high. I think that Cramer gets a lot more crap than he probably should, just because it's kind of funny to poke fun at the guy. But clearly experienced, and yeah, I'll go with Cramer. I might regret it, but I'm gonna go with Cramer.
So we got one Kathy, one Cramer. So I'm going to be the tiebreaker here, and I got to go with Jimothy. I'm going to have to take him. He's been doing this for a very long time, just like you were saying. Maybe he hasn't been too hot in the last couple of years, but I know that before our time, like back in the early 2000s, apparently he was on fire. And I don't know, maybe he could get a little revival right there. But, I mean, I'm not really trying to see any ARK $160 calls in my port, or I'm not really trying to see any what do you call it, like GameStop commons in my port, or I could go on for a little while, man. But many reasons why I wouldn't really want to have Kathy managing my money. I probably would have to go with Jimothy. But that'll wrap it up for Bet the Bell today. I'm going to go ahead and pass it back to Hondo here, and I believe we're doing Trade of the Week.
All right, so We're going to give Ryan a couple minutes here so that we can get trade of the week pulled up. I just finished getting that done. Or I can share my screen. Just give me 1 second, and we will cover one last thing before we get started here.
Actually, I got one more bet the bell question we could go over.
That works too.
I was going to save this one for Wednesday, right? But I really wanted to see what you guys would have to say on this one. This is a really interesting one. Would you rather have $1 million worth of AMC commons, or would you rather have $500,000 worth of Microsoft commons? I'm going to have to start it off with Diamond.
Is there a holding period? Like,
oh, yeah. I forgot to mention 1 year.
Microsoft. Yeah. Not even.
So, keep in mind that AMC right now, AMC is sitting at 434. So there's not much room for it to really, I mean, it could definitely go out of business, but it could fall lower. But AMC is pretty much at bottom.
Are you taking AMC? I mean, I recognize the situation. I understand where AMC is trading at. I understand where Microsoft is trading at. I heard you. I got the question. I'm going with Microsoft.
Okay. Hondo, what are you going with? 1 million AMC or 500K in Microsoft?
Dude, definitely Microsoft. That would be insane to go with AMC. Just because there's like the holding period. Like,
yeah, it's a year.
All right, what's your answer?
I'm taking that million AMC. I see a lot more room for Microsoft to go down than AMC, to be honest, considering Microsoft is pretty close to highs.
Well,
AMC is pretty much at lows.
It's respectable. But I don't see you actually doing that in a real situation where somebody actually, proposed this.
I'm on the same page. I don't think that you actually would. I think that it's convenient for your question, but I don't think that you actually would. I think that you would go with Microsoft. If Microsoft comes down 15% in the next, call it 6 months for whatever reason, it's likely going to be due to like some broader sort of economic thing. It probably wouldn't be like because of a company specific risk, right? Like unless their management team all of a sudden forgets how to execute after 30 years of just executing like absolute savages. Let's just say that happens, right? If Microsoft does come down 15%, where do you think AMC is going to be trading in the next 6 months at the same time? If that's like the broader macro environment that brings one of the cream of the crop companies down 15%, where does AMC go in that environment?
Maybe, I don't know. Let's just say if it did the same. I mean,
I feel like it wouldn't do the same. No, that's my point. That's my point. I feel like that's you're looking at it as like AMC is down so bad that like you can't get hurt falling out of the basement window type of thing, right? Like I understand your point. Still going with the $500,000 in Microsoft personally.
Okay, I could respect it. But that'll wrap it up for Bet the Bell for real this time. I'm gonna have to pass it back to Hondo now.
All right, guys, we're gonna do trade of the week.
It's time for America's Trade of the Week.
Now, here's a guy who knows how to trade stocks.
All right, so this is just the entry and exit from the trade, and then I'll talk about the bigger picture pattern structure that was going on and why we got that really nice rally last week. So the entry on this trade was a false breakdown. So what this looks like is we have an important level of support, okay? ES comes down, it flushes below that level, and then it reclaims. And all this does is it stops out longs who have their stops just below that support level, and it also traps shorts who rush into short below once we lose that support. And so the long entry is on the reclaim of that previous support that had been lost and is now being recovered. So this trade I took at 6 a.m. on Monday morning. So when I woke up, I saw that we had lost the previous week's low, which was that 44.20. Okay, we had flushed it, we reclaimed, and at 44.25, I got long. And the stop loss on this trade goes just below that recent low. So I think the low of the week was 44.11. So I was risking about 15 points on the trade. Okay. So I took profits at my first level of resistance, took some more profits at the second level of resistance, but then I just managed runners for the rest of the week. And how that works is I'll simply trail my stop up whenever we make a new swing low. And so last week we had exceptional trend, and it's really, really important to remember that that's abnormal. Okay, markets chop 80% of the time, meaning that they trend only about 20% of the time. And so the reason I feel it's important to leave runners in any type of trade, whether you're trading S&P futures, options, individual stocks, whatever, the reason I think it's important to leave runners is because it can really, really help your risk versus reward over the long term. Because with a trading system or a process where you take profits or the majority of your profits early on, okay, it's going to be important to then let those runners go. The reason being, you never know when the market's going to chop, but when you do get that trend, like I said, that leaving those runners for me last week, that takes care of multiple losing trades. All right, next screen, please, Ryan. All right. So this was bigger picture. So if you look at the third test on that lower trend line of this ascending triangle, that's where I got long. So not only was it the flush, of just any support where I was getting long, it was a flush of a important trend line and also that previous week's low. So playing the false breakdown around this level was obviously a really good spot to be getting long. And this also shows us why we got such a strong breakout last week. Okay, so it's a simple chart pattern there. Hopefully you guys were able to catch at least some of this move some way or another. But that was the trade of the week. And it was an awesome win and one of my most profitable trades of the year. That's going to do it for this morning's episode. Appreciate you guys joining us. Have an awesome trading week, everybody. Hope that you are geared up and ready to go. We'll be trading in the King Capital Discord live all week. You can go to king-capital.com to trade with us, or you can scan the QR code that is currently on the screen. We got a 7-day free trial going, as always, as you guys know. So we'll see you guys in the Discord. We'll be live on voice and whatnot, doing our thing. We'll see you guys back here on Wednesday morning at 8:30 a.m. Eastern time. Have a good one, everybody.